What's up, everybody? How you doing? Did you miss me? I couldn't put out a video yesterday. I was busy. Big things, everybody. Actually, there's not a whole lot to talk about. All right, let's go over everything right now. You saw the Apple earnings yesterday. A little bit disappointing. Lower iPhone sales year over year, so Apple stock is down. Not a lot, but that's been one of the drivers of the NASDAQ. NASDAQ is down. The other indices as well. By the way, for those of you who follow this kind of thing, this kind of Dow theory stuff, I don't really, but we have not made a new high in the Dow Jones. We have not made a new high in the S&P 500. We made new record highs in the NASDAQ. We made record highs in the Russell 2000. For what it's worth, I'm just throwing that out there, okay? We closed out another successful. There's another one. Not a single losing trade from the recommendations in MMT Trader. We closed out an oil short position yesterday in the mid 47s. We were short in the mid 49s. The background story to this, and I think I spoke about it in the past, that Methinks, remember Methinks? He was emailing me all the time. Methinks, unrelenting bull. But then in mid-March, early April, when the stock market started to come off, he couldn't send me those emails anymore. So he switched over to Methinks, unrelenting bull in oil, because he read my bearish post on Real Money. And so he was sending me that every day. Methinks, you're wrong, Mike Norman. It's going up. You're wrong. Ha, ha, ha. Well, we just closed out another successful short trade, which we were short, and oil came down, all right? Now, speaking of oil, we just had the inventories released a little while ago. I sent out an email to MMT Trader subscribers breaking that down. Now, there is something in there. I have to tell you that even though, we saw drawdowns, and we saw drawdowns last night in the API inventories, but gasoline demand is still weak. All right, and we saw refiner inputs. That's the crude that refiners buy to put into their refineries to produce product. That came down, but it's still very close to a record high. But there is something in that report, one piece of data, and I'm not going to tell you what it is. If you want to get it, you got to go sign up for a 30-day free trial of MMT Trader. But there is one piece of data in that report that nobody is talking about, which I think gives us somewhat of a hint going forward about oil prices and maybe more importantly about the economy. So if you want that and it's free, just go to www.pitbulleconomics.com. Sign up for the 30-day free trial. You'll see the right there on the front page of the website. It says, get the 30-day free trial. I will send you that email. Very important. Nobody else breaks it down like I do, okay? What else? Canadian dollar. Everybody, all the speculators are short the Canadian dollar. If you look at Canadian dollar futures right now on the CME, it is the highest total open interest that I have ever seen. So this is a very, very crowded trade, Canadian dollar short. I happen to be long the Canadian dollar, and I have an open loss. Am I going to prudently stop myself out with a loss? No, I'm going to make a profit. I don't take losses. I take profits. So if you want to find out about that, I sent out an email on that as well. Just get the 30-day free trial. Costs you nothing, and you could look at all the back issues, okay? So that's basically it. We have a Fed meeting concluding today. There's not going to be any rate hike. If you look at where Fed fund futures are trading, it's pricing in about a 5% probability of a 25 basis point rate hike, which means nothing. You know, the Yellen Fed, they're just going to do what the market tells them to do. These are not mavericks, believe me. They're scared. They're so worried, right? They're just going to, the Fed fund futures are saying 5%. We better not do anything. So they're not going to do anything. And that's probably the reason why gold and silver are selling off, but it's no big deal because we're still in a rate hike mode. And this is what always happens. It's what always happens. Every time the Fed kind of quiets down or backs off, you see gold start to drift lower. And then when they raise rates, boom, you get a $100 move in the gold price. That's how it happens. I've been telling you that. So that's about it. I mean, there's not a whole lot to talk about right now. We are in a new, I guess you could say we're in kind of a new fiscal environment now, because they're passing this new funding bill. I'm going to be watching the flows very closely. It looks like all those big spending cuts, the big cuts, they're not going to happen. All right. Remember Trump said, hey, I want big cuts, and all the agencies, looks like it's not going to happen. So got to keep an eye on that, which I will, of course. And one more thing, Treasury general account down to $221 billion from $272 billion. So a $50 billion injection of reserves in the last day or two. That's going to have an impact, all right, because the banks have been buying assets. We saw this in the report, $14 billion of trading assets. You get $50 billion of reserves added. That goes on as bank assets. They got to cool it a little bit. They got to cool it. And I suspect that most of that $220 billion is going to be spent out, because, you know, that's just the normal spending needs of the government. So that's going to flow right back onto bank balance sheets, and that's going to, you know, they're going to cool it. They're going to cool it in the asset purchases. So we'll be watching that. Anyway, that's it for now, everybody. I'm sure you missed me. Congratulations to everybody who made profits on the short oil. I got a lot of emails yesterday from people thanking me. They did very well, either on short futures positions or the SCO, which is the inverse oil ETF. And by the way, let me throw in First Solar up 17% today. We have a position in that. So everything's doing great, fantastic, wonderful, big things. See you later. Bye-bye.